When you admire a really stunning piece of jewelry, do you ever stop and think about the incredible precision and technology that actually went into creating it?
Hmm.
It's way more than just the design and, the precious material.
Absolutely. People often miss that part.
So today we're taking a deep dive into a fascinating, maybe often overlooked corner of the global economy,
Which is?
the market for jewelry cutting machines. Our mission for you is to quickly get you up to speed on the surprising scale, really, and dynamics of this high-tech, high-stakes industry.
Exactly. And we're drawing our insights today from the Global Jewelry Cutting Machines Market Outlook 2021-2033 report. It's by Cognitive Market Research.
Okay.
And it paints a really clear picture. This isn't just some tiny niche sector. It's actually expanding pretty rapidly. And it
Right.
reflects these broader economic trends and evolving consumer demands all over the world.
And when we talk about scale, we really mean it. This global market hit almost $3 billion in sales revenue back in 2021.
Nearly $3 billion, yeah. That's quite a starting point.
And that's just the start. It's actually on track to reach over $3.5 billion by 2025.
Okay.
And the forecast, it's looking like it'll climb past $5 billion by 2033,
Wow.
growing at a steady compound annual growth rate,
Mm.
the CAGR, of about 4.5%.
Right.
So this isn't just like modest growth. We're talking significant expansion. It really underscores this growing global appetite for finely crafted pieces.
Precisely. That consistent growth, from nearly $3 billion heading towards over $5 billion, it truly highlights this increasing global demand for precision cutting technologies.
Mm-hmm.
Think about it. A 4.5% CAGR, that means the market is, well, effectively doubling in size roughly every 15 or 16 years.
That's quite something.
It is. And this isn't just about bigger numbers. It's about the evolving sophistication of how jewelry is designed and made. It impacts everything from high fashion right down to everyday adornment.
So let's dig into that a bit. Why is this precision so crucial in modern jewelry? What makes these machines, well, indispensable?
Well, the why it matters here is pretty fundamental, actually. Modern jewelry design, whether it's a unique, haute couture piece or an intricately patterned ring for the mass market,
Right.
it absolutely relies on exact, repeatable cuts. Imagine the perfect sparkle of a diamond.
Okay.
That depends entirely on dozens of precisely angled facets. Or think about the delicate filigree on a gold earring.
You couldn't do that consistently by hand, not in volume.
Exactly. Not in volume. These aren't hand-carved anymore, not at scale.
Yeah.
Without these high-precision cutting machines, and we're talking laser cutters, water jets, CNC machines.
The whole technological suite.
Right. Achieving these complex geometries consistently would be incredibly time-consuming, super expensive, and frankly, impossible at scale.
So they're the unsung heroes.
They really are. They ensure both the artistic expression and the efficient, consistent production in this, glittery world of gems and precious metals.
Okay, so from that global picture, it gets really interesting when you look at where this growth is actually concentrated.
Yeah.
We might often think of, traditional luxury markets in Europe or North America, but the sources show Asia-Pacific has really emerged as the largest and most dynamic market. What's driving that?
Yeah, it's a really compelling story there. Asia-Pacific, it commanded a market value of over $1.1 billion back in 2021.
Over $1 billion just on its own.
Just in that region. And it's projected to grow significantly, well over $2 billion by 2033.
Wow.
And crucially, it's recording the highest CVR among all regions, just over 5.1%.
5.1%. So that means its market share is growing faster than anywhere else.
Exactly. That growth rate means its market could effectively double in, just over 13 years?
That's fast.
It firmly positions it as the global engine for this industry.
And drilling down within Asia-Pacific, the numbers are really eye-opening. They show different facets of this growth. China, for instance.
Always a major player.
Right. It led the region. Its market growing from over $350 million in 2021 to projected nearly $660 million by 2033. That shows strong annual growth, around 5.3%. That's a huge market, expanding steadily.
It is, but then you look at India.
India's growth seems particularly striking in the report.
It really is, almost doubling its market size from about $170 million in 2021
Right.
to projected over $336 million by 2033. And the pace, even faster, nearly 6% annually, a 5.92% CAGR.
Almost 6%. What's behind that incredible acceleration in India?
Well, the report suggests it's more than just a growing middle class, though that's part of it. There seems to be this deep cultural emphasis on jewelry, both as adornment and, a traditional form of investment.
Right, gold especially.
Exactly. Combine that with India's emergence as a global diamond and jewelry manufacturing hub.
Oh, so production side too.
Yes, it creates this powerful feedback loop. Increased production needs more machines, naturally, and increasing wealth fuels demand for the intricate designs those machines make possible.
So it's consumer demand and a booming manufacturing sector fueling this. And we also see really robust growth in places like Singapore and across Southeast Asia generally.
That's right. KGRs there are well above 5.5%. Singapore at 5.5%, Southeast Asia as a whole around 5.7%.
And these are regions often known for trade and high-value manufacturing.
Precisely. The growth here is multifaceted. You've got rapid economic development across the region, which means a burgeoning middle class with more disposable income.
Which translates to higher consumer demand for jewelry.
Correct. And at the same time, many of these countries are really strategic centers for jewelry manufacturing and export.
Driving the need for the machines themselves.
Exactly. They need sophisticated, efficient production machinery. And, the sheer scale of population also plays a role. Even a small per capita increase in jewelry consumption can lead to massive shifts in demand for the underlying tech.
Okay, so from the rapid rise of Asia, let's pivot now to North America. It's fascinating because, while maybe not growing at quite the same explosive rate,
No, not quite the 5–6% range.
it remains an absolute titan in the market. What does its consistent demand tell us about maybe the maturity of its luxury sector?
Well, it tells us North America is a very established, very substantial market. It generated over $760 million back in 2021.
Still a huge number.
Oh, absolutely. And projected to exceed $1.1 billion, nearly $1.2 billion, actually, by 2033. The CAGR there is solid, 3.86%.
Okay, 3.86%.
So this indicates a mature market, yes, but one that's consistently demanding. It's driven by, entrenched consumer habits, a strong luxury goods sector overall, and just an ongoing need for efficient production to meet that stable demand.
And within North America, the U.S., predictably, I suppose, dominates.
It does, accounting for over $630 million of that $760 million back in 2021.
Wow, the lion's share.
Definitely. And it's expected to approach $1 billion, $983 million by 2033, growing at nearly 3.75%.
Okay, and Canada?
Canada also shows strong growth, actually a bit faster than the U.S. in percentage terms, around 4.6% annually. A 4.59% CGR is projected.
So for North America, it seems less about explosive new demand and maybe more about maintaining high standards in an existing robust market. Would you agree?
I would, yes. It's really a testament to the enduring appeal of fine jewelry in these economies, and also the continuous innovation in design and manufacturing processes that keeps the demand for these advanced cutting machines steady. It's about refinement and efficiency in an already well-developed market space.
Okay, so we have Asia-Pacific with explosive growth, North America with stable, mature demand. Europe seems to present an even more varied picture.
It does, yeah. A bit more of a patchwork.
What can we discern from the different growth rates across the continent?
Well, Europe as a whole is certainly growing. It stood at over $610 million in 2021, and it's rising towards nearly $980 million by 2033. That's about a 4% CAGR overall, 4.068% to be exact.
So still healthy growth overall.
Definitely. But when you look closer, you see significant differences. Germany, for example, is a really strong performer. Its market is expanding from over $113 million to nearly $200 million by 2033, and it's growing at an impressive 4.8% annually.
Almost matching some of the Asian growth rates.
Getting close, yeah. The UK and Spain also show solid growth, both around 4.3 to 4.4%, UK at 4.36%, Spain at 4.34%.
Okay, so Germany, UK, Spain, strong. But then we see a bit of a contrasting story in some other European countries mentioned in the report.
That's right. Russia, for instance, shows a notably slower growth rate, just over 2.6% annually.
2.6%, that's quite a bit lower.
And Luxembourg is similar, also around 2.6%.
This really raises an important question, doesn't it? What unique market dynamics or maybe specific economic factors might be influencing these slower rates, especially compared to the robust growth we're seeing in Germany or the UK?
That's a crucial point to consider. I mean, a 4.8% CGR in Germany suggests a market doubling roughly every, 14, 15 years? That indicates strong investment, strong consumer confidence.
Right.
In contrast, a 2.6% CAGR, like in Russia or Luxembourg, implies a doubling time closer to 27 years.
Big difference.
Huge difference. And the significant divergence Well, it could be attributed to various factors, maybe market maturity in some specific segments, or it could be influenced by specific economic headwinds in those countries.
Yeah, maybe even geopolitical factors impacting luxury goods or manufacturing investment.
Potentially, yes. It really underscores that even within a broadly growing region like Europe, local conditions shape market performance very profoundly.
Okay, moving on from Europe. Our sources group South America, the Middle East, and Africa together as sort of emerging or developing markets, but ones with promising expansion.
That's a good way to put it. Lots of potential there.
Let's start with South America. The market there totaled over $185 million in 2021, and it's projected to reach over $327 million by 2033.
Right. And the overall CIGR for the region is robust, about 4.8%.
4.8%. Which countries are leading that charge in South America?
Well, we see particularly strong growth in places like Argentina. It's growing at over 5.3% annually.
Okay, over 5%.
And Chile is also strong, over 5.0% annual growth. Brazil, which is the largest market in the region, is contributing significantly too, with a solid 4.6% CAGR.
So it really indicates this upward trend as these economies continue to develop, right?
Yeah.
Increasing purchasing power, more demand for luxury items.
Exactly. It follows that pattern.
And the Middle East also presents a picture of pretty rapid expansion. It was valued at over $147 million in 2021, expected to reach over $256 million by 2033.
And the annual growth rate there is about 4.7%. Again, very healthy.
Which countries stand out in the Middle East?
The UAE really stands out, experiencing strong growth at nearly 5.3% annually.
Okay.
And Turkey is right there too, over 5.0% CAG.
And these are often hubs for high-end retail, tourism. There's a strong culture valuing elaborate jewelry too.
Precisely. The increasing wealth, often generated by energy exports, but also diversification efforts in the region, it translates pretty directly into higher discretionary spending.
And a demand for sophisticated jewelry, which requires these advanced cutting machines.
You got it. It all connects.
Finally, let's touch on Africa, a continent often seen as having just immense future potential. Its market for these machines was valued at over $123 million in 2021, expected to rise to over $213 million by 2033, growing at just over 4.1% annually.
Yeah, Africa's growth, although it's starting from a smaller base compared to, say, Asia,
Right.
it's still significant. South Africa is leading the continent there, with nearly 4.8% annual growth projected.
Okay.
And Nigeria also shows solid expansion, over 4.4% CAGR expected.
So if we connect this to the bigger picture across all these emerging regions, South America, Middle East, Africa.
Yeah, we tie it together.
Their growth seems to mirror their broader economic development, doesn't it?
It really does. As these economies mature, as urbanization increases, as discretionary spending grows, so does consumer interest in luxury goods like jewelry.
And that, in turn, fuels the demand for the sophisticated machinery needed to produce these items efficiently and crucially to a high standard.
Absolutely. It's a really clear indication that these global wealth shifts are directly impacting even quite niche industrial markets.
Yeah.
It shows us where that next wave of demand is likely coming from.
So you've just taken quite a deep dive with us into the surprisingly dynamic and really valuable world of global jewelry cutting machines.
It's more fascinating than you might think at first glance.
Definitely. We've seen how the market is experiencing consistent growth, and in some regions, really explosive growth. It's driven by this ever-increasing demand for precision. Asia-Pacific is clearly leading the charge, particularly with that astounding acceleration in countries like India and solid growth in China.
Can't ignore that region.
While established markets like North America and Europe, they maintain stable demand and significant market share, although, as we saw, with quite varied national performances within Europe.
Indeed. And this market, while it is highly specialized, it truly underscores a crucial point.
Which is?
That technology and meticulous craftsmanship, they aren't just surviving in the modern age, they're actually thriving, propelled by these global consumer desires for beauty, for individuality, and for precision. The numbers, they reveal more than just sales figures.
They tell a story.
They really do. They point to evolving economies, shifting patterns of wealth, and I think the enduring human appreciation for finely crafted items across all cultures. It's a fascinating lens through which to view global economic development, actually.
It really makes you think, doesn't it, how every single facet of a finished product, even the, sophisticated tools that make it, has this whole global story to tell. So what stands out to you? listening in about how this precise technology might impact the future of jewelry, not just in terms of luxury, but maybe in local economies, or even the very definition of modern craftsmanship.
Yeah, that's the question.
Will these machines make bespoke, unique jewelry more accessible? Or will they just keep pushing the boundaries of what's possible in mass production? Something to ponder. Thank you for joining us on this deep dive.